Weak global cues lead to a sell-off on Dalal Street. Markets erase last week gains. The Nifty and the Sensex end down 1%. Banks see the biggest fall, tank 2% this week. This week, we take stock of the global market setup. We tell you about the big block deals, and we also tell you why brokerages are hot on the metal space. I'm Reema Tendulkar. Joining me today is Sonia Shenoy, Nimesh, and Nigel. Hi guys, we had a midweek holiday, the holy weekend, but it still feels exhausting, right? Like we got whipsawed both ways and inundated by news flow.
It didn't feel like there was a midweek holiday. It felt like such a long week, but by the end of the week, I guess, the Bears and the Bulls, there was this big tussle, and the Bears were on top.
The Bears were definitely on top, by the end of it, particularly in the Friday's trading session. You're hoping that there'll be some bit of a pullback during the day. But by the end of it, I think the 200 DMA got taken out, and small fight towards the end, but at least the Bulls will feel they live to fight another day. Otherwise, it was Bears all the way.
Absolutely. I think that sell-off started on Thursday in the last 1 hour of trade, and it just accelerated on Friday. And by the end of it, the Nifty is down 1%. Mid-caps, though, relatively flat, right, for the week. So that's the saving grace.
Absolutely. I think that's a big talking point, that the broader markets are relatively outperforming, while the large caps are not. So that I think is a bit of a comfort as well for not only for the traders, but for some investors as well. Because, the portfolio is not hitting that much, what we can see in the Nifty and the Sensex this week. So that, to my mind, is a bit of a positive sign that at least the broader markets are trending upwards.
I think you give them an option, they'll say, let the broader markets outperform the Nimesh after the kind of underperformance we've seen, because the portfolios are not feeling anyways like 17,500. So at least if these broader market stocks do well, then at least the portfolio feels a little bit better.
A little bit better, right? But I think just to set the context, so much happening in the next half an hour of the show. But first, just to set the context on the markets itself, the Nifty closed down 1% this week. It sliced through a lot of levels, right? The 200-day moving average, the 100-day moving average, all of that was sliced through on the downside. And the mid-caps were largely flat, but there was some pressure beneath the surface as well. I think give and take everything, this market is in a band. 17,400 on the downside and 17,800 on the upside. There doesn't seem to be any trigger which could take this market either way. Of course, global cues are definitely cautious, as we saw the data with SVB, and you have a lot of global data coming out as well. So bulls are definitely on the back foot, but let's see, we still have a lot of important global cues to watch out for. Reema, what are you tracking?
Well, it was an action-packed global week and full of twists and turns. So there were two events which gave the global markets a new direction. One of them was the surprisingly hawkish testimony from Jerome Powell, which put on the table the possibility of a 50 basis points rate hike in the next FOMC meeting. That's the first one. And the second one is the collapse in two financial stocks. One of them is SVB Financial. It's a bank which caters to the tech startups in Silicon Valley. It's called the Silicon Valley Bank. And the other one is Silvergate, which is a crypto-focused bank. And these two, the collapse and the kind of fall that we saw in the individual stock prices, has raised the specter of a hard landing. So if the majority of the market participants at the beginning of the week were saying that, well, in the next FOMC meet, we're going to get a 25 basis points rate hike, after listening into Jerome Powell, they said, well, now I think it's going to be 50. But after you got that collapse in the financial stocks, the ripple effect across the rest of the banking space, just look at the CME Market Watchers, the tool, right? That has scaled back the expectations of a 50 basis points rate hike in March. So I think, the jury's still out on what's going to happen. So what is the next FOMC meeting going to track? Well, the next FOMC meeting is on 21st and 22nd of March. The last one took place on the 31st of Jan to the 1st of February. After that, we got the January jobs data and the January inflation data, and it will also react to the February jobs data and the Feb inflation. Today, we'll get, the jobs data. On 14th of March, we will get the February inflation data. But the jobs data is going to be very critical because it's been, sizzling hot, right? For the last 10 months, the market has been underestimating the strength of the resilience of the US labor market, and they've been getting the jobs market wrong. So these two data points, the Feb and the January numbers, will weigh into what the Fed is likely to do on the 21st. So, those are just, want to put on the table what happened on the global front. A new direction has practically emerged this week, and it came out of nowhere. How did the dealing rooms deal with all this?
Reema, if you look at the markets for this quarter, like since January, we are stuck in that 900-point range, which means 5% on 18,000 levels, right? So it's not like we've seen a despite the fact that we had this big Adani saga 2 weeks back. Now we have the global risk off which is playing out. But having said that, we're not breaking 17,200 on the downside. We are not able to cross 18,100, 18,200 on the upside. So we're stuck in this very narrow range. Last week I spoke about the bit of momentum back in the mid cap and small cap. So the broader market outperformance continued this week as well, despite Nifty and Sensex down 2%. The broader markets have outperformed. So that trend continues, and that's likely to continue is what my sense is in the coming weeks as well. So that's something to track. I guess, the higher interest rates, the longer the higher interest rates continue, I think that's going to be the reality, at least in the near term. And that could actually mean some accidents globally as well as in India as well. So I think that's the risk that market needs to factor in going forward. The other important thing which we'll have to track for this month, for the month of March, is the domestic liquidity. The mutual funds are sitting on a lot of cash, almost over 1 lakh crore of cash they're sitting on. And historically, March is the month where you get a lot of insurance money as well because of the insurance premium that a lot of the investors pay off, right? So that is the big support or a cushion for the Indian markets, at least for the month of March. So that's the overall feedback, that there will be a bit of a cushion from the domestic flow, is what I understand. But as I said, even last week I had hinted about large block deals, and that trend continued this week as well. So I've just worked on some more data. So let me just go to the wall and explain what actually happened, since the January in terms of the large block data. So here's the data. If you look at, since January of 2023, the number will surprise you. 35,000 crores. That's the amount of what block deals have taken place in the Indian markets since the Jan 1st, which is close to $4.3 billion. As I said, among that, of course, the biggest chunk has gone to the Adani group. So Adani family has managed to raise $1.8 billion by selling stake in the 4 group companies to GQG. That was a big news that we all followed for in the last couple of weeks. So 4 companies, Adani Ports, Green, Enterprise and Transmission, where they sold large chunks, and they've managed to raise 15,400 crores, put all together 1.8 crores across all the family, across the Adani Group stock. So this was one promoter which sold a large chunk. There were also a couple of other promoters which sold a big chunk in the group companies in this quarter. So in Biocon, Biocon sold 10% in Syngene, and they raised close to 20 to 50 crores. And there was one more promoter where in Interglobe, the Galvan family, they sold another 3.7% stake, and they raised close to 3,000 crores. So these were some of the large promoter stake sales. Even if you look at the private equity investors or some strategic investors, they've sold big chunks in this quarter. So look at Coforge. Bering sold 10% stake in Coforge, and they've raised close to 2,200 crores. There was Apex Partners who sold 3% stake in Shriram Finance, which happened this week. That was a large block. Look at SoftBank selling out of Delivery. Not only SoftBank, but even Tiger Global, which is one of the large private equity investors. They sold a big chunk in SoftBank in this quarter. This week we also saw a large block in Home First Finance, where Bessemer, which is a VC Capital, they sold 7.8% stake there. So that was a large block. Alibaba, kept selling stake in Paytm this quarter, so that was a large block. And we also saw in Motherson Sumi, the Japanese partner, selling out 3% stake. So a lot of blocks have happened across promoters and private equity investors, in the first 3 months, so to speak. My sense is, what the investment banking are telling me, there are more such deals in the pipeline. So even for the next 3 weeks, you're going to see even more large blocks coming in, and the total size can actually cross $5 billion as well. So that's the amount of money which the promoters and private equity investors have raised by selling stakes in the Indian listed companies. So that supply overhang is likely to continue, and that's being a big reason why Indian markets are actually underperforming, and there is a bit of supply glut which keeps coming up every week, and that's been the trend which is likely to continue.
Okay, Nimesh, thanks a lot for that. So that's on the data, but let's move on. Nigel has been tracking a lot of the metal names. So Nigel, the brokerages are betting big on metals. So take us through what you're picking up.
Well, metals is high beta, right? When you see the markets get a little bit jittery, you normally see metal index, they correct far more. That didn't happen this week. And there are a few brokerages that are getting quite optimistic. Let's start off with Aquarius. At the end of the week, they came out with a note, and they have upgraded the steel sector to overweight from neutral earlier. The key reasons are, yes, they say export markets could get a little bit weaker, but the domestic demand will more than offset that weaker export market. The key factor that they're highlighting out here is that the demand-supply dynamics are going to turn favorable after more than 12 years. That's they're talking about 13 years odd. Why is that? Because incremental production will be close to around 6.5 million tons odd, while incremental demand will be more than 8 million tons. So there'll be a demand-supply mismatch is what they're working with, and that's why they're saying that it'll hold us in good stead. Remember, for this year, that's FY23, they're working with a number of around 117 million tons odd. So they're saying on that base, there'll be an addition of around 8 million tons in terms of demand. And in a pre-election year, normally you see flat steel demand as well as relatively better. So their top picks are JSPL as well as SAIL. Kotak, out of the blue, they went ahead and they upgraded Tata Steel earlier in the week, and they really started off this upgrade cycle. They're saying the risk reward is favorable at these levels, so they have a buy rating out there. They're saying in the last 1 year, well, the stock has been an underperformer, but now domestic margins are likely to bottom out. Earnings will be fueled because they have a capacity expansion that's coming on stream. Weakness in Europe is likely to be basing out there as well. And there could be a kicker coming in from China if there is some stimulus that's announced. And finally, Jefferies, they're not only talking about the ferrous space, they're also saying that they like some of the non-ferrous space. So their top pick in there is Tata Steel, followed by Hindalco. And the few reasons that they're giving, they're saying Chinese data is looking far better, manufacturing PMI is looking good, property prices as well quite good. Chinese inventory levels, seasonally adjusted, is at the lowest we've seen in the last 4 years or so. And Indian steel prices are at a bit of a discount in comparison to what we have seen globally. Finally, on the non-ferrous side, aluminium prices are flat this year, but thermal coal prices have cooled off. So the spreads have improved. So that's why, in fact, all these brokerages, they're quite positive on metal names. But Sonia, the first IPO from the Tata stable, well, it's been a long while since we heard that. Tata, tell us more about that.
Tata Technologies.
Technologies. Almost 20 years,
Yeah,
right?
almost 20
the
years.
last one was TCS way back in 2004. So I thought let's just, go on to the big wall and talk a little bit about that. As you said, it was a big day for the Tata Group because this is the first Tata Group IPO that has been announced in the last 19 years. And this is many firsts. So it's the first Tata Group IPO in 19 years. It's the first Tata Group IPO under the tenure of N. Chandra, who took over way back in 2017. And, just to give you a couple of details, right? The last one was TCS in 2004. And now you have Tata Technologies, which will be the third listed IT company under the Tata Group. There's TCS, Tata Elxsi, and now Tata Technologies. So let me tell you a little bit about the IPO itself. Tata Technologies is a subsidiary, a wholly owned subsidiary of Tata Motors. Tata Motors owns about 74% stake in Tata Technologies, and the company plans on selling 9.5 crore shares, which is a little under 24% of its paid up capital. Now, a couple of details, right? Tata Technologies is the IT services arm of Tata Motors. It has captive clients in the form of Tata Motors as well as Jaguar Land Rover. Now, Tata Technologies, does a lot. So basically, it's a range of services, whether it's IT consultancy, SAP implementation and design and maintenance. There's design consultancy as well. But the good part is that this company has very, very strong fundamentals. So in FY22 itself, it was a highest revenue growth that they've seen of 46%. And then you have about 15% growth in 9 months of this year, 23% growth in profitability as well. And, overall, if you look at it, even the margin profile, right, the operational profile of the company has improved quite a bit. So its adjusted margins were just about 16% in FY20. They've gone up all the way to 19.5% in FY23. Now, what is in it for the Tata Motors shareholder? Monetization, of course, the monetization of their stake, which is a big positive. Apart from that, they also did this EV deal with TPG a while back. So put together, the IPO proceeds and the EV deal will help them to reduce their debt, and they're on track to achieve zero debt on the India business very soon. So they will achieve their guidance. So that's the big IPO that was announced this week. It was in the headlines because, as we said earlier, it's the first IPO from the Tata Group stable in the last 20 years almost. Let's do one thing. Let's take a quick commercial break on that note. But lots more coming up with our guests on the other side, talking about the big headlines of the week, as well as telling you what to expect. Punita Kumar Sinha will be joining us in just a minute.
Welcome back. We're now joined by Punita Kumar Sinha, the managing partner of Pacific Paradigm Advisors. Punita, great to have you, and happy Women's Day, right? It's just apt this week that we get you on the channel. But so much has been thrown at the markets in the last 2 months. The underperformance versus China, the Adani saga, higher inflation rates, higher interest rates. We're now talking about the possibility of a 6% terminal rate for the Fed. The kind of fall that we've seen, the underperformance of the PSU banking space in the last 2 months. It's been a tough time for money managers. How have you navigated the volatility in the last 2 months, and how should one position their portfolio?
Indeed. First of all, happy Women's Day to all the viewers and to all the anchors at CNBC. Yes, it's been a very volatile and tough times, and I don't think that's going to change anytime soon. I think this is the time to remain defensive in value names, in quality names. India's growth is still looking good compared to a lot of the other countries, but this China reopening trade has taken a lot of focus away from India into China and North Asia. So a lot of, at least foreign money is looking at the recovery of China, and that's the trade that's been in play right now. India is actually not in focus from the short-term investors. Of course, from long-term strategic investors, India is as important as it's ever been. And so a lot of the strategics, the companies, global companies are still looking to India as a China plus one possibility. So I think that the long-term growth of India is actually looking very good. But from a short term, India's valuations are not as attractive versus its own history and versus other emerging markets. And so at the moment, I think the focus is on some of the other emerging markets.
Okay, Punita, hi, welcome to the show. We just did a piece on how there is an IPO in the Tata Group after what, almost 20 years, Tata Technologies. But how are you feeling about stocks like Tata Motors now? Because the company is doing all the right things, reducing debt, monetizing their assets, but somehow the stock just doesn't give returns to shareholders, at least in the recent past.
Yeah.
How are you feeling about it?
No, I myself have been a victim of Tata Motors because, every time we think it's looking really attractive and the auto cycle should rebound, for whatever reason, the stock is not performing. I think too many people have got burnt in it in the past, so more cautious to get back in. But I do think the auto sector is seeing recovery and should see some recovery because, post-COVID, and the supply chain issues. Now, finally, supply chain issues for the auto sector have somewhat normalized. So there's more volumes available to sell. So I think things should improve from here on. But having been burnt myself, I'm not like gung-ho or getting back in aggressively.
Okay. Hi, Punita. We saw a big commitment from GQG partners, Rajiv Jain committing $1.8 billion to the Adani Group. Have you tracked this space? And do you think a lot of the valuations in Adani Group stocks have become attractive now?
Well, this is a tricky one, and I have not tracked it very closely because we don't hold any Adani stocks. And I think there's a lot of companies in India that one can buy. So especially the focus on ESG. We look at companies where there's, the controversial, number of controversies are lower. And so as a result, we've not really been investing in this.
Hi, Punita. Good evening. Thanks so much for joining in. Any ideas, any themes you could share? As you said at the start of this conversation, that you could look at defensive names as well. What would qualify as defensive in this sort of a market scenario?
So, for one, I think Bharti is looking good, I think. So that's a stock that one can look at. In addition, I think, it's interesting because while we are very dependent on macro data on global markets, and India is moving in line with those cues, so the Fed commentary seems to be driving most markets. However, if you look at within sectors, there's attractive opportunities in almost every sector. So, for instance, I still am a big believer in capital goods manufacturing because I think this outsourcing from globally to India, the inward outsourcing to India is a theme that's really, really growing. And for that, we need to really build our manufacturing capacity. And that would mean that a lot of sectors that are sort of, enabling the manufacturing sector will do well. But if you look at valuations of most of these companies, a lot of it is in the price. And so you have to be very selective. I mean, while the theme is very good, and from a growth perspective, the growth rates are going to be very strong. But then how do you look at valuations? Because you're in a new regime where growth is higher than it's ever been, because we've never seen this kind of demand for India. But then the valuations are reflecting that, right? So I think in every sector, there are some stocks that are relatively more attractive. But overall, I think India's valuations are still at about 10 to 15% premium to its own history and to other emerging markets. So you have to be very selective. Whether it's banking, I think there is valuation disparities there that one can capitalize on. You talked about autos. There are some valuation disparities there. Telecom, I mentioned.
Punita, since you said autos and you've said you burnt your fingers with Tata Motors, I just want to take a try at this one. The big theme this week, in the week gone by, was electric vehicles, and we saw, a huge surge in names like, say, an Electra Green Tech, a JBM Auto. Do you track this EV, e-buses space, and do you see any opportunity here for investors?
So, I have been looking at EVs, but more on the venture side, not so much on the listed space, because I think there's more opportunities in the new technologies that are coming up.
Okay, with that, we will take your leave. Thanks a lot, Punita, for joining us, and have a great weekend. Thanks for being with us on this edition of Editors Roundtable. And to all of you folks, have a great weekend. We'll see you again bright and early Monday morning. And all of you, have a good weekend as well. Nigel, I know, is off for a holiday. Nigel?
Absolutely.
Have a good one. We'll miss you.
We're going to miss you.
I'm going to have a great one. I hope I'm going to miss you all as well.
I'm sure not. I'm sure not. But better get something back for us, okay?
For sure.
Chocolates, and that's all we want. Nothing else.
That's doable.
All right, folks. We'll see you guys bright and early on Monday morning. Have a great weekend.